Welcome to the ZionsBank Economic Update. My name is Joseph Mayans, and joining me is Robert Spinlove to provide an economic wrap-up of 2017 and an outlook for 2018. Robert, we have a lot of ground to cover, but why don't we start with just some of the overarching economic themes that we saw in 2017 and maybe how you see those going forward into 2018.
Sure. So what kind of the theme of 2017 is kind of transition. Starting off in 2017, we had this diversion between what we call soft and hard economic data. While we saw our soft data was picking up very quickly, consumer confidence, business confidence, the stock market started to rally, and we've seen many new highs in the stock market. We didn't see that on the hard data, at least in the first half of 2017. However, going into the second half of 2017, we started to see that hard data starting to surge. So GDP actually started to grow above 3%, surprising many people. Employment growth, we're now above 86 months of employment growth. The unemployment rate dropping down to 4.1%. So we've seen a number of different indicators now showing a lot of signs of strength. Going forward into 2018, we think that we have the ability to continue this kind of growth, that we'll see growth going forward and we'll continue to have pretty strong economic conditions.
Right. You mentioned some of the strengths. What about some of the trends that were maybe a little bit weaker than expectations? What did you see there?
And this has been one of the big struggles to the Fed. The Fed has kind of a dual mandate. They want full employment and strong employment growth, and then they also want stable and low inflation, and they've defined that as 2%. And so even though we have really strong employment growth, low unemployment, we're not seeing strong wage growth. Before the recession, wage growth was around 3.5%. Now it can only come in at about 2.5%, so it's lower than it should be. Inflation, again, the Fed's goal is 2%. We're only seeing inflation around 1.5 to 1.7%. So inflation is too low. So we're just not seeing those indicators. And then labor force participation, you would expect to see a strong economy pulling more people off the sidelines, but our labor participation is remaining too low. And now we don't know exactly why this is happening. Janet Yellen has called this the biggest mystery in economics. But we do know that basic economics say that when there's a lot of demand and low supply, prices should go up. So I do believe that those wages are going to go up and that inflation is going to go up. The fear is that that could go up very quickly. We could see a pop, maybe jumping, from 1.6 to 4.6% inflation. And that's a problem too. And the Fed might have to get aggressive dealing with that.
Right. And talking about the Fed, they had a very active year in 2017, raising rates 3 times, starting to unwind the crisis era balance sheet. How did you see some of these trends affecting their policy, and how do you see it going into 2018?
Yeah, so the Fed before the Great Recession had interest rates much higher than they even are now. But coming out of the recession, they dropped rates, the short-term rate all the way down to about 0, so effectively 0. Now, over the last few years, they've raised them now 5 times, and we're right around 1.5% on interest rates. The Fed is committed that they're going to continue raising rates. Their current forecast is an additional 3 times in 2018. So the Fed, they raised them 3 times in 2017, and they're saying they're going to raise them 3 times in 2018 with a long-term goal of around 3% in the federal funds rate. So we should expect to see the Fed continuing to raise those rates to try to get the economy at a more normal level for interest rates. But it could be difficult if we continue to see this disparity between some of our different data points.
And earlier you mentioned the strength of the stock market. You have the Dow, the S&P 500, NASDAQ, all hitting record highs in 2017. What did you see that was kind of behind that, and how do you see the markets going forward in 2018?
I think a lot of that is tied to this business and consumer confidence that we talked about. The stock market is based on expectations of future economic activity, and investors and people throughout the country expect, and they see these good conditions, and they expect to continue to see those improve. And so what we saw was a big jump in equity markets across the board. The Dow rose by over 6,000 points over the last year. NASDAQ and S&P are all at new highs. Now the big question is, can they stay at these levels? So there's an expectation that there's going to be all this new activity based on the promises of the Trump administration, whether it's taxes or healthcare or infrastructure. But the big question is, will they be able to follow through on all those, and will they be able to continue to grow the economy like they've said they're going to do in the past?
Right. And switching the conversation to another asset class, I think we'd be remiss if we didn't talk about the rise of Bitcoins and the other cryptocurrencies. Big year in 2017. How do you see this space going forward in 2018?
Bitcoin has been such an interesting example. It's not new. Bitcoin has been around for many years, over 5 years. But it's just all of a sudden become very front and center in people's interest, and mostly because the price of it has gone up so dramatically, rising by 2,000% in 1 year to astronomical levels not seen before. Now, here's the important thing to keep in mind about Bitcoin. It is showing the classic signs of a bubble. And so the price where Bitcoin is today is not consistent with a valuation. So it's not based on fundamental, typical fundamentals of valuation. So Bitcoin is overvalued. A lot of the cryptocurrencies are overvalued. But the big question is, when will they drop? How will they drop? What will set them off? We don't know. No one knows. If you go back to the late 1990s, when Alan Greenspan talked about irrational exuberance in the stock market, it took years for that statement to come true. But he was right. And in hindsight, we knew it. So most people agree that Bitcoin is overpriced, that Bitcoin is exhibiting the tenets of a bubble, but we just don't know what will cause it to drop. And by the way, people were saying that Bitcoin was overpriced when it was at $300 each, and now it's at $17,000. So it'll be interesting to watch how this plays out.
Yeah, that's very interesting. I think it'll also be interesting to see how regulators decide to treat those cryptocurrencies in the years to come.
Definitely. Right now, it's kind of the Wild West.
It is. Thank you, Robert. Thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.